Good morning, everybody. Hey, no! February the 26th, 2026. Gold Standard Live Radio Network from the mobile compound here at Vincenzo'S Gold Crypto Investing. Bell notification, comment down below, like the channel and share as we have a sunny daybreak today at 6:51 a.m. as springtime is fastly approaching. Some of the snow has melted, most of it from yesterday that fell as temperatures rose into the middle 30s. We have a current temperature of -9 Celsius, around 13 degrees Fahrenheit, And as we get on with the morning, become a member of Jabroni Killers, $3.99 a month. It helps support the retail trader and investing channel, cheapest and best value out there, keeping you out ahead of everything, keeps corporate interference out and the paid promotions, most importantly, and keeps this channel free with content. But we did have major price action yesterday, so we're going to get right on into the coins. You can see the major move in the Bitcoin price yesterday that we were watching when we talked about yesterday morning. We were sitting down here trying to work to the upside, and we had a ferocious rally and actually got on the top side of that major 200-day weekly time frame moving average that's been acting as resistance and support, but resistance because we were below it. And you can see we were up better than 7 or 8%, almost 9% yesterday before we peaked out towards the afternoon close. And now we've consolidated a little bit over the last several hours. And if we actually zoom out, this will show you even more. That's on too localized of a time frame. Get out here into the hour time frame and you can see that much better. I don't know what's going on with the chart down there with all that gray, but we'll have to worry about that at another time. You can see that was the move we made yesterday, and it was a big move from where it was at. It was sitting at 61. It went up about $7,500 yesterday, right? So that's a big move, almost 9%. Now it's consolidating as we would expect, back on the 200-day moving average. And now what's going to happen here, and this is another free technical class for you. What's going to happen here, God, I hate how it makes me do this, is you're either going to have where you come back and you're back testing this right now. You see that? You're back testing it. You're either going to hold this back test right here. This is what I'm talking about. You see this? See how you're back testing that right now? You're either going to hold that and you're going to kick up for the next leg to the upside right there, which has major upside potential, something that we've been talking about, the 50-day moving average in the red candle up there at $83,000. It's probably closer to $80,000 now. That is an upside target on the pump to the upside, and 85,000. But you can see if we do hold this and break up, it brings you right into here, this major area of resistance and support on a brief consolidation before we had our major leg to the downside, right, where we were sitting at around 78, then we shot all the way down to about 60,000. That's where you can move on the upside. Now on the technical level, on the downside, if you fail to hold this retest that you're at, you're going to quickly come down to your drop point, which your first one is sitting down here at 62,000, then your wick low at 60, and then you would most likely break that and end up at 51,000. So there is quite the spread right now between where you could go quickly to the downside and where you could go to the upside. It's almost a $30,000 difference from where you're at. You're at like the mid ground. If you decide to get bullish, you have major room to the upside. If you decide to get bearish, you've now built liquidity with major room to the downside. Ethereum, yesterday we broke this major downtrending resistance that we had, that we drew on there, I believe in yesterday's live time radio show. And then we told you if it breaks it, it's got free reign to get all the way up to $2,100 quick. But then if it could break that, you're looking at the $2,600 as your major upper resistance, right? After you've double bounced off this blue support and resistance box, a major box, and you in fact did bounce off of it. It doesn't always play like that, but 2 times right there it did. If you come back to it now on a 3rd time, decides a brief bounce, I would expect a breakdown, and your downside risk, if you do come down to this blue support and resistance box again, is down there at $1,036. So there's large spreads between potential short-term pumps and potential short-term dumps based on where the price is consolidated to. We did have that ferocious bounce in XLM just above that 14.5 cents, what we were talking about yesterday. It had about a 50% move back up to where we were at, got up to about 16.5 to 3/4 cents to 17 cents, and now it's trending down a little bit. Now what we got to see is, can we get the buyers back in and make a realistic run up here to that 18 3/4 cents, and maybe up to the 50-day moving average at 20 cents here in the daily time frame? Or is this just another brief spike like we've seen here in the past, the most recent past? Let's go to the geometric shapes, retarded. Where like we had here and then we went down, we had here and then we went down, and then if we scrolled into the more recent past, there's millions of examples that I could pull over the last 4 to 6 months, right? Every time you pump down, every time you pump up, you get quickly sold off. So that's what we're watching here. The XRP is the same thing. We got above a critical level though, the 200-day moving average in the weekly time frame from yesterday. We still do not want to buy you, no matter how many times that pops up. And I don't know how that came up. Things just randomly pop up and then you can never get rid of them. So that's just going to be down there now. But you can see we bounced up into just above. Come on. Just above the 200-day moving average on that swing pump yesterday, where you went from 131 all the way to 149, and now you're trending back down. And again, that's your critical level. Can you on your back test hold and continue to the upside from that 141 or 200-day in the weekly, or are you going to fall below it and then you quickly fall back down towards the $1.31 and eventually the $1.12? Big swing potential, because the upside you have a $1.85, or otherwise known as the 100-day moving average in the weekly time frame is your major upside resistance, right? So we have a lot of potential here on what could happen. Lots of room on the support side, lots of room on the resistance side. Oh my God. I just want to get out of there. Like shit. Like I don't even know what that was in. Since they updated this thing is dumb. It just pulls up random shit. Changes your stuff. But Trump had the longest State of the Union apparently in U.S. history. I didn't listen to any of it because I don't partake in that kind of nonsense of any of that shit. I look at the financials and whatnot. But initially, the dollar tanked and silver and gold and crypto went up, but then it reversed the other way. So I'm not sure what he said, but he said something that didn't have the gold and dollar together. But now they reversed. But something that we want to talk about as this gold standard at 6:59 a.m. ends, in another message that I feel is very important. And I know I leave these till the end as we scroll this, but I feel this is the most important thing in this monologue to end the show and the radio show this morning from the Gold Standard Radio Network. Hit that bell notification and like, comment down below. Is there's been a warning shot silently fired the last 12 months, especially the last 6 months. Silver and gold bullion accelerating and hitting all-time highs and going to a local euphoric blow-off top, biggest in commodities history, while at the same time the U.S. dollar, or the stock market, was rallying to all-time highs and at a euphoric high. That's only happened twice, right, in history. Once was in 1999, and once was in 2008-9, right? Because gold's signaling a warning, and the stocks are rallying off the inflation. But what happened in 1999? You had a massive collapse in stocks and gold, bullion, but then gold rallied quick. And then in 2008-9 with the financial crisis, again, you had a massive collapse in stocks and gold, but gold rallied quicker because gold is moving up due to massive problems it sees in the economy worldwide, in the United States, that people aren't seeing. And stocks are rallying right now due to high earnings with inflation, right? But eventually it all comes unglued like it did the other 2 times, because they're not, when gold rallies, it's supposed to signal there's fear, there's problems in the economy, right? So you have bear markets usually at that time where equities go down, stocks go down, real estate goes down, people start losing their jobs, inflation rises, right? And that's why gold's going up. So either gold's wrong for going up and the economy's great, or gold's correct and there's a major crisis on the short-term horizon. And that's what I'm trying to warn you of. I think there's a major crisis on the short-term horizon. And my philosophy for the last 25 years has been the 2020s were like the 1920s. So the early 1920s, we had a crisis in 1919 with the quickest but most severe bear market and collapse in stock market history, but it recovered because there was no government interference. Then we had the roaring 20s, but then at the end of the roaring 20s, we had the start of the 1928 collapse that rolled into the Great Depression, that rolled into World War, right? And I think that's exactly what's going to happen now. I think gold has been signaling for 2 years, and now silver for the last 18 months, of a major crisis that's there in the equity markets, in the housing market, in the global markets, in the financial markets, that are there, that it's warning, and the smart money is heated, and the dumb money doesn't know. And by the time the masses figure it out, the smart money's already moved, the losses have already been taken, and the collapse is already on their way. This is not me predicting a collapse. This is me telling you what I think is going to happen. I cannot read the future, nor can anybody else, but I believe a major storm is coming as we work into 27 and 28, just like it did in the 1920s. And if you're not familiar and you're too young and don't understand what happened in the 1920s, go reread history. Understand the history. Don't read the rewritten history that they're trying to do. Read what really happened, why it happened, and understand what took place and why it could happen again. And then you'll understand what the gold standard believes is coming in the late 2020s. And I believe the 2030s are going to be bad. And if you have anything, be happy that you have it, cherish it, build upon it, make it better, repair it, hold on to it, right? Because I think there's a massive storm and a massive change coming in this country and around the world. Something like we haven't seen since the Great Depression in the 1930s, which in the 1920s that led to the 30s, which led to world wars, which led to America and a change in the world economy. And I think that's coming again, in my own personal opinion. Signing off from another live radio show. We appreciate you listening to the Gold Standard Radio Network. We'll be live on February the 27th, 2026. Peace and love. Jay.